Assalamu alaikum. Good morning. Today we'll start with the another chapter of economics, that is TY semester 5th, and the name of the chapter is agricultural credit. Before starting with the chapter, first of all you have to know what you understand by agricultural credit. As we all know, the finance is the finance is the main part of our life. Without finance we can't do anything. Here we will learn about the agricultural finance. Means the as we know, our India, the main base of our India is agricultural. Without agricultural we can't do anything. Whatever the income is created in our economy, that is it is with the agricultural purpose only. But for doing that agricultural, if suppose अगर फार्मर को भी एग्रीकल्चरल करना है, दे नीड अ फाइनेंस. और इवन अगर इन जनरल अगर हमें भी अगर कुछ करना है तो वी नीड अ फाइनेंस फॉर that finance, from where we can arrange that finance. So this chapter is related to all about the agricultural finance. If suppose अगर फार्मर को एक एग्रीकल्चरल पर्पस की कोई एक्टिविटी करनी है तो from where they can arrange the finance. Without finance they can't do anything, they can't even purchase the seeds. So this chapter is related to agricultural finance. That means it is a study of financing and liquidity services credit provided to farm borrowers. That means agricultural finance is related to that farmers are getting the finance for their agricultural activity. They are borrowing from somewhere else and they are doing the agricultural activity. So this chapter is related to all about the finance. That means agricultural finance. That means the farmers are getting the loan fund for their agricultural purpose from the financial market, which these intermediaries obtain their loan able fund. That means farmers are getting the loan from the financial market, from the banks, from the commercial bank. There are various types of banks. From there they are getting the loan for their agricultural purpose. Now for getting the loan, also for getting the finance, there are various sources of finance from where the farmers can get the loan. Now there are various needs of agricultural finance. As we know, without finance even we can't step out. If you want to step out also, we need a finance for that. So now here we are studying about the agricultural finance. That means the farmers are if the farmers want to do a agricultural activity, they need a finance. Without finance they can't do anything. So this topic is related to need for agricultural finance. Why there is a need of agricultural finance? What is the use of agricultural finance in the agricultural activity? As we know, first point, the need arises to provide credit to all those the farmers who required it. Those farmers who required agricultural credit, that means those farmers who required a loan for the agricultural purpose. So that's why the agricultural finance is very much necessary. Second one, if the farmer wants to do agricultural activity, they need a credit for what purpose? For purchasing the seeds, for purchasing the fertilizers, for doing the irrigation, and for purchasing the machinery, etc. So that's why they need a credit for the finance. So credit for the finance, so that they can do their agricultural activity in a smooth manner. Next, farmers have invariably search for a source which supplies adequate farm credit. That means the need of agricultural finance for the farmer is the need of agricultural finance. The need of agricultural finance is for the farmer is, that means they can supply adequate farm credit. That means whatever they need a credit, whatever they need a finance for their agricultural activity, they can get from the agricultural finance. And the last one is the small and the marginal farmer. They don't have that much of money to start that much of money to start the agricultural activity so that's why to start the agricultural activity they need a finance. That's why this agricultural finance is very much necessary. That means small farmer or the marginal means what? Medium sized farmer. That means they are not having that much of finance to start their agricultural activity. So if they want to do a agricultural activity, they need a finance for. That's why the agricultural finance is very much necessary. Nextly, next topic is there are various sources of agricultural credit. These farmers, these agricultural finance, from where they are getting the agricultural finance. That means there are two sources of agricultural finance. First is the institutional source and the second one is the non-institutional source. Institutional source is also called as an organized sector market, and the non-institutional source is also called as a non-organized sector. In institutional source or the organized sector, that means farmers are getting the loan, but they have to follow too much rules and regulation. They have to follow the too much paperwork, too much rules and regulation, too much procedures. Without that, they can't get the loan. They have to first properly apply for the loan, and then only they can get the loan from the institutional sources. Institutional source of finance takes a long period of time, because once the farmer wants the loan, they have to apply for that, and after the approval from the institution, then only they can get the loan. And the second one is the non-institutional, which is opposite to the institutional source. That is, in this they don't need to they don't need to follow the rules and regulation. There is no long-term procedure. They can get a loan as and when necessary. So the example of non-institutional sources are money lenders, traders, commission agents, relatives, and landlords. But the institutional sources examples are cooperative banks, commercial banks like SBI Group, RBI Group, and NABARD. Now we will study in the detail about there are different institutional sources of credit, which banks are providing the institutional sources to the farmers. Like first one is the commercial bank. As we know, commercial bank, in the commercial bank we are taking the example of SBI, Bank of India, Bank of Baroda. They are providing the loans to the farmers for the purpose of short term, medium term, and the long term purpose, so that they can do the agricultural activity, and for the rural development purpose also these commercial banks are providing the loans to the farmer. Nextly, there is a regional rural bank. These banks are open up where there are no where there is hardly having a banking facilities. So this type of banks are open over there. That is the regional rural bank. If you take the example of Kashmir, in Kashmir that is a remote area, there is no facilities of proper banking. So these types of banks are open over there. So what is the aim of these banks? What is the aim of these banks? These banks are also providing the loans to the small and marginal farmers over there. Nextly, cooperative society bank. These bank is also aims to provide the credit to the farmers, but at a very low rate of interest. So the better example of these cooperative banks, if you will take, mostly these banks are forming in the rural areas, cooperative banks, where they are providing the loan to the small farmers, marginal farmers, and for the rural development purpose. And the last one is the self-help group. These are in the self-help group, these are not the these are also one type of bank, but in this, credit is given for the money collected by each member. That there are various members are coming together, and they are contributing their own money, and from that they are providing the loans. So whoever in need of that finance, they are providing the loan with a very low rate of interest. Nextly, there is a non-institutional source of finance. In the non-institutional source of finance, first is the money lender. In the previous years, we are heard हमने तो ये सुना ही होगा कि money lenders, they are providing the loans to the farmers. They are providing the credit to the rural people. But इसमें कैसा होता है कि they have to pay at the time of repayment. They have to pay the heavy amount of interest to them. So that's why this money lender, but at that time they are not having any other kind of source, so they have to take the loan for the agricultural activity from the money lender. Then rich landlords are those who are having a too much of land with them. They are providing the loans. They are also providing the loans to the small farmers and the marginal farmers at a very high rate of interest. At the time of repayment, the farmers have to pay the high rate of interest to the rich landlords. Then the traders and the commission agents. These traders and the commission agents are providing the credit to the farmers, small farmers, at a mortgaging crops at a high rate. That means they are taking the crops they are providing the loan to the farmers for the agricultural activity, but after the cultivation of the crops, they are taking the crops from them at a very high rate. at a very high rate. And the last one is the relative and the friends. In the relative and the friends, there, that means the farmers relative and the friends, they are providing the credit facilities with a no rate of interest. There will be a no rate of interest, but in this non-institutional source of credit, there will be a no that much of procedure, there will be a no that much of formalities to be followed. Directly they can get the loan without applying, without any formalities or without any procedure. Next, there is a role of rural banking in rural development. What is the role of rural banking? Okay, why the banking sector? Why the banks are open in the rural area for the rural in rural development? What are the role the rural sector has been made in the rural development? Rural banking in the rural development. First one is the credit facilities to the farmer. These banks are providing the facilities of the credit to the farmer so that they can, whether that farmer is a small, whether that farmer is a marginal, whether that farmer is a rich, they are providing the loans, to the farmers so that they are providing the credit to the farmers so that they can start their business, they can do a rapid expansion of their business in the agricultural activity. And these banks are also providing the credit facilities to the farmers for the for the rural development purpose. Nextly, there is eliminating the money lender. That means by opening these rural banks, they are eliminating the money lender. As we know, money lenders are exploiting too much in the early age to the farmers. They are taking the farmers are taking the credit, taking the loan from the money lenders, and at the time of repayment, they are exploiting the farmers. So, by eliminating these money lenders, that the farmers can get the easily loan from the banking sector. So because of this, they are eliminate the role of money lender. And the last one is control on feminize. Feminize means what government can maintain a buffer stock after a green revolution to control the feminines. Means in this, the government, what the government are taking, they are taking the crops from the farmer and they keep as a buffer stock. Buffer stock means at the time of any uncertainty created, any uncertainty will created in the rural area or in the agricultural activity, the government maintain this buffer stock for the safe side. Thank you very much. Here we had come to an end with this chapter. If you are having any doubts regarding this chapter, you can contact me on my detail I had mentioned on the first slide. Thank you very much.